Hey traders, welcome to the top tier outlook, your outlook for the week, the game plan for the week. What are we dealing with and how do we prepare for the trading week to come? I'll tell you what, and I would say kind of squint at this because it is really, really tough to want to think about. We have more FOMC speaking engagements stacked up in the first handful of trading days than I have seen in a while. Take a look at Monday, May 20. 1, 2, 3, 4, 5, 6. 6 FOMC speaking engagements just on Monday alone by the time we get to 2 p.m. Eastern. You move out to Tuesday, and sadly, it does not look much better. You've got 1, 2, 3, 4, 5, 6 again. So heads up, what we have dealt with in the past when we have the FOMC speakers on the calendar is basically this. What happens is they're not all going to agree with Powell. They're not all going to agree with what is at this point in time been stated overtly by Powell, which is that rate cuts are coming before rate hikes. But of course, they're perfectly allowed to speak their own opinion, even though it's Powell's opinion and the target rate probabilities via the Fed Fund futures, a futures contract whose sole reason for existence is to allow traders to speculate on what will happen with rates at each one of these scheduled meetings. Meaning we have a way to look at broader expectations about rate cuts, regardless of what these Fed members say. So I know this is awful bright. There we go. So take a peek at December. Let's work backwards. Are we still expecting a certain number of rate cuts? I know it's only May, but as we get to year's end and as we embark on this week, take a peek at where rates are. They're at 5.25 to 5.5, right? That's the current target rate. So one rate cut brings us to 500 to 525. Those are basis points, right? So 500 basis points is 5%. If we take a look at that, there's a 32.5% that will be there. Okay, well, that doesn't sound very good, Rob, because the rest of the percentages are far more rate cuts. 35, almost 36% for 2 cuts. And as you move to the left, the 4.5 to 4.75 at 17% and so forth. So we are still looking at Fed Fund futures, again, whose sole reason for existence is to speculate on what the Federal Reserve will do at each one of these meetings. Now, we're not expecting really any rate cuts until September. It looks firmly a hold in June and pretty darn firmly a hold in July. So this would be a September, November, December series of cuts if we're going to get them. This is not speculation. This is not my guessing. Please remember, as much as we can root our analysis and our trading in data, and in this case, the data that we're leading on is the Fed Fund futures and these target rate probability charts that the CME group puts together for us so nicely. All right, so that being said, let's take a look at the sector behavior month to date. Now, what does that mean? If we're going to get follow through, this is what I teach in the Sector Secrets Mastery. This is what we do in terms of trades in the Sector Secrets Mastery. And that is what has the best chance for follow through. We all know we love trends, right? Think about any time you've seen a really nice period of account growth in your account. For us in the Sector Secrets Mastery, Q1 was amazing because what we had was a clear track on monetary policy. There was a high expectation for up to even 4 rate cuts as we wound down 2023 and embarked on 2024. So nice, clear trend in monetary policy. Then we had that nice, clear trend with all-time highs punching up in the NASDAQ and in the S&P. And those environments where follow-through is really clear is when we typically grow accounts. Now, think about what happened in April. April wasn't just an accident. April was really the reflection of what happened with that once really clear rate cut expectation. Meaning, once we heard from 1 or 2 FOMC members that rate hikes were something they were thinking about, the market just freaked out. The Fed Fund futures, those target rate probabilities reacted. They responded in kind. And until we heard from Powell during the press conference who said, no, we are not going to hike before we cut, did we see some normalization towards the end of April? The VIX finally dropped down from 900 or wherever it was. It was close to 1920 on the VIX futures, and it dropped down into that beautiful range that we saw through Q1, which was around 15 to 13. And that's actually where we sit even now. We're actually below 13 on the VX futures. We can start to see what's coming back. We're starting to see follow through. Remember, fills get us in, but follow throughs pay us. And that's why we love trends. And that's why we seek out the relative outperformers. So when I take a look at a graph like this, take a look month to date, who's near the top. Take a look month to date, who's near the bottom. And really your trade should align a lot with those. All right, so next up is what are we seeing on the S&P? And sorry, my clock isn't up. There we go. So what are we seeing on the S&P? Well, you can see right here on the 15th, we had a nice surge higher, lots of bullish momentum, but we don't have the trend. In fact, we lost the trend really officially on the 4th of April, and it really hasn't come back. But if we think about sentiment plus momentum equals trend, then we know that the bullish momentum that we've seen establish itself by the 9th of this month could be the harbinger to higher highs and potentially the trend coming back. But there are some tools we can use for buy the dip, for pullback buys, even if we don't have the trend back. So what we'll do is we'll rely on the tools on the chart. So what does that mean? I don't want to pick a top. I don't want to be a top picker. I don't want to short into new highs. I'll let someone else do that. And I'm rooting for them, by the way, because those folks who are actually playing the pullback itself by shorting at a high, well, that's a lot of the reason that buy the dippers like myself, pullback buyers, get the moves that we're waiting for. So look, I'm rooting for them. We don't have to be looking at this combative type approach to trading. I hope the folks who are thinking the markets have gone too high step in and short and drive prices back down to the gray zone, the price movement range support on my charts, because that's going to give us another opportunity to get long, whether that be the S&P, whether that be the NASDAQ, whether that be the Dow. We're even seeing a lot of resiliency in regional banks. You can see there, and we actually have a trend in regional banks, which should benefit singularly the Russell. So if you say, Rog, are you bullish to Russell? I would say, let's do this. Let's just focus on regional banks, and that would be the KRE. While we're talking about banks, what are the big banks doing? The big banks may not have a trend, but if we're seeing higher highs in the S&P, if we're seeing higher highs in the Dow, there is one sector to always look at first and foremost, and that is the heaviest weighted sector in the Dow, which is the financials, the XLF, and the number 2 weighted sector in the S&P, which is the XLF. Very seldom are these two indices, the S&P and the Dow, going to rally without financials participating. Now you'll see here that the Dow is still sitting under some resistance just above 40,300 on the YM futures. But take a look at XLF in that same span. We punched up to a higher high. And these are going to be, in many ways, the sectors or the cylinders, if you will, of the motor that we call the Dow or the S&P. So if this thing is firing away, which it is, green candles, higher high, I don't want to guess at where the exhaustion could be. Some of the things that we did in the Sector Secrets Mastery were taking advantage of strong uptrends in the financial sector via individual stocks like Wells Fargo and American Express. In fact, there are a number of uptrends in the financial sector in the XLF that I would highly recommend you take a look at. All right, so first question here coming from Green Eggs and Ham. We take a look at GE for a longer term investment. All right, so I want to make sure, since the word investment's out there, I am not an investment advisor. I'm not in any way telling anyone that this is what they should put in their portfolio, but let's talk about the weekly time frame, which is what I would primarily look at for a setup that has a longer time horizon. Let's just all agree that if we are looking at a longer term time horizon, whether that be a long-term trade, whether that be an investment, whatever the word is, we want to look at a longer term time frame. And that for me is going to be the weekly. Now, has GE pulled back enough for me to justify a long? It hasn't. So timing is still going to apply. The same timing I think about trade entries is the same timing I think about for longer term positions. And in my position portfolio, I still have to think about risk to reward. And what that means is I don't want to be buying ever at or near highs. I always want to see a sale, right? In every other walk of life, a sale is something that we as humans like to capitalize on, right? But there's an old saying, and that is Wall Street's the only place where they throw a sale, right? And nobody shows up. In fact, everyone's busy returning whatever they bought while there's a sale. Isn't that curious? So, oh, by the way, speaking of sales, for those of you that have been wanting to check out what we're doing in the Sector Secrets Mastery, if you head on over to sectorsecrets.com, you can check out the Sector Secrets Mastery. And right now, we are running the Memorial Day sale. So if you thought, Rog, I missed that amazing deal during the last class that you had, or any other opportunity, is there an opportunity for me to join you at a discounted price? This is it. So you'll see the Memorial Day sale is store-wide. I think there are some exceptions. I don't know them off the top of my head, but I can tell you that the Sector Secrets Mastery, the daily price movement ranges, and the hourly price movement ranges are all on sale. So if I can pass some savings on to you all, I always like to let you all know. Right now, we've got that 30% off. That's kind of a no-brainer if you want to join us there. So back on over to GE. Once, by the way, you join us in the Sector Secrets Mastery, the first Tuesday of every month, which is coming up. The first Tuesday of every month, we take a step back and we spend an entire session on what are weekly time frames and position portfolio opportunities. And we just did that last month. We had a couple of triggers on our longer term portfolio. So I just share with you things that I'm seeing on the longer term time frame for a longer term hold. I love GE, green eggs and ham. I love the look, but I need a sale, right? So until I get a sale on GE, you can take advantage of the sale over at Simpler Trading. All right, so let's take a look at what I would look at for a pullback. The most aggressive I'm even willing to be is about 461 or 146.60 to about 134.50. That's not a bad place at all to be looking at a pullback. Now, think about what that means. We all know that a lower cost basis when we're trading helps us control risk, right? If I pay a high amount for an option, if I pay a high amount for a share of stock and that pulls back, that represents risk. So in my mind, rather than buying things as they're surging higher, healthy trends correct. Write that down somewhere. Healthy trends correct. If you are a trend follower, if you are a trend trader like myself, then you've seen this and you believe in it. So now the tough part is waiting for it, right? And everything in the FOMO, YOLO, all the O type mentalities. Oh my gosh, it's going to take off without me. Let it, right? Wait for the sale. Capitalize on that. They do tend to come. And I get this question a lot with Bitcoin. One of the things that I probably early in my career really didn't utilize enough was that there is another bus that's going to come, right? Another train's going to stop at the station. And I know it may not feel like that, but let's use a really ridiculous example like Bitcoin, right? Because BITO and Bitcoin are back on the move. And whenever we have risk appetite in equities, it does seem that Bitcoin does tend to benefit from that. If someone said, Rog, I missed Bitcoin, it's trading at 60,000. Isn't it amazing that all those months, pretty much for look at this, June, July, August, September, October, Bitcoin's hovering above the 200. Now, I use a 200 propulsion, which is a shorter term moving average and a longer term moving average. In fact, one of the most classic technical analysis approaches on a chart is just using the crossing of a short and longer term EMA. And that's just one example right there with the white dots. Look at how long we were just hovering in this area. Was there much talk about Bitcoin? Of course not, right? It's only going to be talked about here when it's nearly what? 2 times the price. So, like I said, if someone says, "Oh, Rog, I missed it," please keep in mind that when that second train comes around, when that bus comes around, whatever your motive preferred, we've been watching, my husband and I today have been watching uh, Europe, great train trips through Europe or something on some travel channel. There are some amazing high speed rail. They were going through Spain, Greece. Anyways, kept thinking about this train analogy. Same thing happens in trading, right? Oh, I missed that ride. You may not get that same price, but you'll probably get a better one. So, guess what? At some point, are we going to pull back in Bitcoin? Yeah. Is it going to happen tomorrow? Probably not. But 6 months from now, 8 months from now, again, using this train analogy, are we going to trade down to maybe 46, 47,000? Probably, right? Probably. And so when that happens, right? And by the way, this is the second time we've been up in this area. Y'all remember, let me go on the daily time frame and go back 10 years just to make this point, whether that's GE or whether that's Bitcoin, right? Remember, we've been way up here before. Oh, right, back here in 2021. And what did it do? Wait for the second train. It may not be exactly what you wanted, but it's going to be better than jumping in at 60, 70,000. Okay. So I use the same. So, Rob, what does it have to do with GE? Same thing. There will be another train. There will be a time when it pulls back. And that to me is probably for longer term, buy the dip, trend following, the toughest lesson for most traders to learn. Because right now, when something's at higher highs, that's when financial media talks about it. Remember, they're not here to help you time your portfolio. Nobody cares more about your money than you do, right? They're just going to talk about what's quote unquote news. They're going to talk about what's hot right now. How many times did you turn on the television and those folks were talking about GameStop? Really? Right? So remember, news is just to grab your attention. The boring stuff, when GE pulls back and nobody's talking about it, or Bitcoin pulls back and nobody's talking about it, right? That's when usually you take a look at your wish list pricing and say, yeah, I'd like GE at $1.40 or $1.30 or $1.20. And all that's going to accompany that buy is bad news, right? And that's a lot of times what buy the dip and trend following feels like. And that just seems to be a reality in the market. All right. What is my thought on NET moving up on low volume? I don't worry about volume based on the day. I don't actually look at volume in that way at all. Sandu, if I'm looking at, ask me NET. So if something's moving up on low volume, that just means there's not as much participation. My bigger issue with NET is it's still very weak. And why would it move up on low volume? Well, I would say size is usually going to accompany what? Size is going to accompany usually institutions. Size is going to accompany a mass of retail traders. Right now, I'm not surprised there's not a lot of movement higher on volume because it's still in a downtrend. So you have some bottom pickers coming in and trying to get opportunistic, and that's fine. But if we get on the other side of 80, you'll likely start to see some size then. But what I would also recommend, Sandu, is don't worry about whether or not a Tuesday has a lot of volume. That's what most traders do. But let me tell you what, I hate to use the word smart traders, but let's talk about, because smart traders, everyone has a smart trade, but let's talk about size. Instead of smart money, let's talk about big money, right? Big money doesn't have to be smart. Big money's big. So what we want to see is that if you pull up NET on, say, TradingView, pull up the visible range volume profile, find out where the size is and has been for, say, the last 6 to 12 months. Look at where the point of control is for this year. Look at where an anchored volume weighted average price is for this year. Look at price-based volume. It'll change your trading. It'll absolutely change your trading. All right. With that in mind, gang, thank you as always for joining me for Top Tier Outlook. We're live every Sunday from 6 to 6:20 p.m. Eastern. And then I'll see you tomorrow for Charts and Coffee. We'll be on from 9 to 9:20 as we are Monday through Friday and have been for 3 years running. So thanks as always for tuning in. Go enjoy the rest of your weekend. I'll see you tomorrow morning. Be good to each other.